Hi everybody, my name is Chris Donovan, and I'm a sales associate with Lightspeed Financial Services Group. In today's brief video, we will be discussing calculating overnight positions. Lightspeed and our clearing firm employ a mark-to-market daily accounting of all positions held overnight. Many other active trading firms also employ the same accounting practice. When you hold a position overnight, the cash/equity in your account goes up or down the first night based on your entry price and the official 4 p.m. market closing price of the stock. For example, if you hold a position overnight for a second consecutive night, your cash/equity goes up or down based on the difference between the closing price from the first night and the closing price on the second night. Allow me to elaborate a little more. A common question we encounter is, I sold my overnight position for a profit. Why did my account value go down? Most of the time, the answer is mark-to-market accounting. For example, your account has a balance of $25,000. and you buy 100 shares of XYZ at $20 per share. And it closes that day at $24 a share. Your account cash/equity is then increased by $400 the first night. Then, the next day, you sell the position for $23 a share. Since you were already given the profit of $400 previously, but sold it for a total profit of $300, your equity/cash is decreased by $100 on the second day. This means, starting on the third day, your account balance will be $25,300. I hope you found this video helpful. Thanks for watching, and have a good day.